watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's go straight to our top story. Factory output rose for a sixth consecutive month in September. Data from the PSA showed that the volume of production index rose 124% year on year in September, reversing the contraction of about 57% in the same month of 2020. However, the September print was weaker than the revised growth rate of over 530% recorded in August. Economists said the slower growth in September can be attributed to the manufacturers' adjustments to the localized lockdown system. The PSA said the sustained growth in September was mainly due to the expansion in 13 industrial categories led by coke and refined petroleum products, as well as fabricated metal and machinery and equipment. An earlier reading by IHS Markit showed that factory output as measured by the Manufacturing Purchasing Managers Index expanded to 50.9% in September from 46.4% in August on the back of looser restrictions in Metro Manila. The PMI further rose to 51 in October. A PMI reading above 50 signals increased manufacturing activity. Meanwhile, the Agriculture Department is hoping to see modest growth in the agriculture sector for the remaining months of the year. The sector saw a 2.6% contraction in the third quarter. That's despite the GDP growing by 7.1%, blowing past estimates. Agriculture Undersecretary Fermin Adriano said the department is now targeting 1% growth for the sector this year. That is below the agency's already downgraded full-year growth target of 2%. Adriano said the DA is upbeat that the sector will see modest recovery in the fourth quarter ahead of the increased demand during the holiday season. He said crop subsector is seen carrying the agriculture sector moving forward. He added that the 1% full-year target is doable as long as no typhoons will hit the country during the remaining months of 2021. All right, better than expected third quarter GDP blowing past all the 13 economist estimates by Bloomberg. Factory output growth as well. Will the rally continue into a bull run? You can see that happening this morning, up by 0.35%. 7465.71 is the level. We are seeing this, of course, happening after we've seen fourth straight days of inflows yesterday from foreign investors. Best performing in Asia yesterday, and that highest closing we've seen since February of 2020. Already yesterday, we were up by 5.5% month to date, and it seems that that number is just going to be continuing. Let's take a look at the biggest movers of this morning. 6 minutes into trade, Alliance Global, Metro Bank, PLDT, and LTG leading the charge this morning. On the downside, you've got Converge down by 2 9/10%. Jollibee as well down by 1 8/10%. This, of course, happens as Jollibee was one of the best performers yesterday, up by close to 4.5% on the back of Bloomberg reporting a possible bid for Shanghai Cafe Wada. So there are other deals going on today. Let's take a look at Synergy, which is now trading down by 97%. It's actually swinging between gains and losses here. Recall that they did have set the new price for the follow-on offer at 12 pesos a share. Before that, it was trading at 395 pesos and 80 centavos. Before, of course, they had to dilute the stocks to have more of a float. They've said that now their float is above the 20% that is required by the PSE. And that was halted on May 28. And this, according to AP Securities, the stock is quite attractive. You get a monopoly plus a dividend yield. The projected dividend yield for 2022 may be as much as 10.2%. From the proceeds of the follow-on share. And they said that even if this is not a stock for capital appreciation, it will be well above the 12 peso follow-on offering. This, according to Papa Securities, Synergy will be among the most attractive stocks in terms of valuations. And finally, just a very quick peek on Merrimark, which is still suspended. We are waiting on that. And we will be looking into that later on in the day. They have finalized a majority stake purchase in Carlos Superdrug for that is a 75% stake for 340 million pesos. They will actually they already have 27 operating branches, and Mary Mart will be forming using that to form the Mary Mart 100 branch network in 2021. So you might be seeing drugstores, Carlos Drug, already in the Mary Mart branches. Now, here to chat more about all this, we have with us Tina Ulang, Head of Research at First Metro Investments. Good morning, ma'am Tina, and welcome back.
Hi, good morning, Danny. Thanks for having me. Thank you.
Okay, ma'am. So exciting times here for the bourse closing in on 7,500. Tell us, is this another knee-jerk reaction from a great GDP print that was not really expected, or is this another cycle? Reopening na naman of the economy, cases down, and we need to be wary for a pullback or a correction.
Yeah, you're right, Danny. Cases down and very high hopes for alert level 1. We have not even hit alert level 2. High hopes for alert level 1 and a Merry Christmas and Happy New Year. Very strong hopes. And it's not a knee jerk. I don't think it's knee jerk because as early as July, we had this First Metro Investment Capital Markets briefing and we were predicting 7,400 to 7,800 range for the PSA. And the foreigners are buying. The highest was like almost a billion this week, almost a billion in one day, and 3 days of consecutive foreign buying. And we noticed the foreign buying as early as June, and it was in trickles. That is not to say we are not on foreign selling this year. We're still on foreign selling 1.5 billion. But the beautiful thing about it is that the PISE is now hovering at the 19 times PE, and still foreigners are buying. So what does that tell you? It means there is more room for upside. That may not be a straight line because the infection can increase. There could be caution again. There could be lockdowns. We don't know how the Delta virus is mutating, so there could be ups and downs on the way to like maybe 7,008. There is an overshoot already as far as our forecast of 7,400, and we're very happy with our with our forecast being breached. And it's not based on any knee-jerk reaction. It's really fundamental based. If I were to recite to you the very good macro data, FDI 55% up to 5.5 billion, it's not as if we're not in a pandemic. It seems that we are in a normal environment. Our exports are up 21%. Our government spending is also up 11%. Our trade balance is already widened, reflecting the robust capital imports, capital goods imports already. So these are indications of good things to come. Our long-term PE is low. That is what's giving investors hope for next year. It's just 16 times PE and then 19 times forward.
Ma'am, can you say that our markets are now moving in step with the economy? That it's actually, very linked. Whenever you mentioned that, the robust and fundamentals are there. And how do you compare this with other markets in the world? When we talk about the global
Mhm.
opening, there's
Mhm.
euphoria even in the S&P 500 the past week.
Mhm.
Does this show that the global economy, the Philippine economy, is strong, and that is clearly being reflected already in market movements?
Mhm. Yes, the movement now is very much fundamentally driven. It's well supported by very favorable macro data, very resilient macro data, not only in the home front, but also in the region as well as globally. Because the IMF continues to see the global economy on the growth path, like 5%, 6% for the US economy next year, 6% for China, 7%. Although they have downgraded, still the global economy would be on the growth path, especially with the booster shots being administered in the advanced economies. We should have the booster shots and the third dose. The good news locally is that the children are already being inoculated, and we at one point hit a high daily inoculation of like 1.5 million, and we are that's one day high, and we are aiming for that sustainably so that we can the legs can be there in the rally of the PSA for next year. Corporate earnings, very good results. almost this is just the average of the average, about 35%. Our expectation is 25% for the whole year, so it's already being breached. Look at the results of DMCI of the all-time high, Semirara 244%, BDO already back to pre-pandemic level, 95% earnings growth, 9 months, Metro Bank 46% earnings growth. And this talk about rising interest rates should not really worry us because the government balance sheet is very strong. Our maturities are longer dated, and the corporate balance sheets are also very strong in terms of the leverage.
Ma'am, what about the vaccine percentage and the fact that we are unlikely to hit the herd immunity targets by the end of the year? Is this something that market have brushed off already and basta reopening economy despite the vaccine percentage?
Of course, the inoculation should really accelerate. We should be achieving 1.5 million inoculation rate per day, and that is really what's going to give us the strength to reopen back to normalization to alert level 1. But the main concern is really this alert transition to alert level 2 and alert level 1. It might cause a resurgence in the infection because the Singaporean experience has shown it. The highly inoculated countries of the US and Israel and even China, they have seen a resurgence. So this is one key risk for the market. It's really still the pandemic. But going forward, there is this view that this pandemic could become endemic. Although the infection rate may rise, it won't swamp the hospitalization. It won't translate into very heavy hospitalization rate, high utilization of the healthcare facilities, and therefore the economy could go on. And that is now being termed as the living with COVID, and the COVID becoming endemic. It will not disappear, but it will not be overwhelming. And it will just be another ordinary flu because of the high inoculation rate.
Yeah, so hopefully we get to that point na endemic na po siya. Ma'am, you mentioned earnings here and you're quite surprised about the earnings. Let's try to parse through a few that we came out with in the past days. JFC up now it's correcting downwards by 1.7%, but yesterday was up by 4.5%. The estimates for the third quarter beat analysts, and then they are still on the path to buying and acquiring. Is this again just excitement over news that they might be acquiring new companies, or we've seen Jollibee in the past acquiring and that hitting its income in the process of Smash Burger, in the process of Coffee Bean. Why are investors more bullish now with these new acquisitions and openings in offshore markets?
Well, Jollibee is three things for me. Number one, lots of cash. They have raised a lot of cash in preparation to build up a big war chest. Number two, acquisition. Acquisition of brands that are not local but global and very strong. Number three, it's definitely a reopening play. It's expanding locally, it's expanding abroad, and the franchise, the brand equity is very strong, very dominant, strong market share. What more can you ask? You only need to see the devaluation. You have to time it because it's very expensive now. And but the future is very bright for Jollibee. All the right strategies they have adopted, and the management ought to be commended. A very strong balance sheet. They have raised a lot of cash and through their bond issuances, and the response has been good and overwhelming. Strong confidence there from among the local investors in their bond issuances, also from the foreign investors, and onwards. Jollibee really is the brand to buy because of the ability to pass on costs. The worry is that the inflation is going to cut on margin, but this brand will be able to pass on the cost because of the patronage locally and abroad. And of course, the brands that are being bought is one way of quickly expanding the reach of the company abroad.
How do we look at the target price here, ma'am? Given that puro acquisitions nga, and it's hard to compare it to the prices that even historically.
Mhm. I noticed many companies now are very dynamic in their acquisition, and to set a target price would be like to set a cap on the potential of the company when a lot of things are happening. That's very true with the renewable expansion of ASEN and Aboitiz Power. So if you set, it's only at 31, 34, it's likely to be breached. When it comes to Jollibee, there's a lot in motion going on the acquisition of this just reported rumor or factual. There is this milk tea acquisition, and then this bakery and restaurant brand acquisition. So how do you value all of this very dynamic? But the thing to look forward to would be the revenue potential, the revenue synergies, the cost synergies that this is going to bring to the Jollibee, and of course the brand. How can you value the brand? The brand is has the potential to grow over time. And therefore, the valuation is made complicated by that. Are they overpaying? Are they not? Are they buying it at a bargain? We don't know. So this has to be done on a case-to-case basis. The target acquisitions, and then you folded it into company, and then make an estimate of the future cash flow. But that's the tricky part. How do you how do you capture the growth story in a simple spreadsheet? That is the tricky part. And what is the weighted average cost of capital that you're going to apply, knowing that the pandemic is going to unfold? We don't know. So many risks.
Yeah.
And so it's just time the mark, just time the stock and look at the lows and the historical lows and the historical highs, and then maybe you can make a measurement of whether you have the appetite already to buy and to stomach the future volatility of this particular stock.
Ma'am, last question here on the property space. We had SM Prime, and this was the probably one of the first stocks that I've seen that it was falling after it had reported the third quarter. Is this indicative of the property sector in general, given that it has so much weight?
SM Prime is going to benefit from the mall reopening. So many people now, it's a mall reopening revenge. the, the people are so hungry for the air condition and the shopping spaces there, roaming around and the eating out, dining out. And hopefully we achieve the inoculation to benefit the malls and of course the tenants. No, the rental rates are going back to the normal rate. Slowly, very slowly for the tenants, and that's good for SM Prime. The residential segment is doing very well, being patronaged by the local market and also by the foreign market. And the promise of the reclamation, of course, is there. The expansion on the land value and the fact that there's a potential for REIT. They haven't done it, but it will be coming soon when things normalize.
Okay, so brushing off the third quarter and looking forward looking into this last couple of months of spending and mall traffic. Thank you so much for those insights, Tina Ulang of
Thank
First
you.
Metro Investments.
Thank you. Bye. Bye.
Here are other headlines we're keeping our eyes on. The Senate is raising the allocation for health insurance and public hospitals in its version of the 2022 budget. Now, under the Senate version, the Health Department, PhilHealth, and government hospitals will see their allocations raised to about 312 billion pesos from the current 242 billion pesos. If this is adopted, health agencies would be given the third largest overall budget, following the DepEd and DPWH. Senate Finance Committee Chairperson Sonny Angara explained that they don't want to be caught off guard in case a new variant comes next year. The Senate is hoping to have the budget bill approved on the third reading by November 25th, which would allow the bicameral conference committee to convene by either December 2 or 3. And PLDT Home is on track to meet its goal of connecting more than 1 million customers this year. PLDT Home business head Butch Jimenez said they quickly saw the increased demand for fiber, so they immediately responded by scaling their expansion and installation capabilities. Meanwhile, the telco giant inked a deal with Meralco and Spectrum for energy efficiency and sustainability initiatives. PLDT tapped Serve, Meralco's electromechanical arm, to conduct an energy efficiency audit on the company's 139 facilities. This is to check their compliance with the Energy Efficiency and Conservation Act. Meanwhile, generation company Spectrum will install solar panels in 5 PLDT sites in Visayas. And that's a first look into the business day. Today is Wednesday, November 10, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.